So I was just discussing this with somebody on a personal level, and this person made and invested 2.5 million, and after about 17 odd years, the value of that asset, real estate asset, has gone to 25 million. So that's almost about 10% increase, right? Okay. My name is Fahd Dawood. I talk about real estate, your life, my life, and us allowing financial abundance coming to us. I've been doing this for 14 plus years. I'm also the author of The Intelligent Real Estate Investor. You can buy it off Amazon, or you can order the ebook. If you want to work with me, means you want to buy a property or one of my other services, such as, evaluate an opportunity. Perhaps you want to negotiate hard and sell and save money. There is a contact form. You can reach me below. Okay, let's get back into the nitty-gritty of this deal. So what did I tell you? So 2.5 million in about 10 years became 25 million rupees. Okay, here, oh, by the way, it is rupees. Okay, so this transaction that I'm talking about, it's specific to Pakistan. Now, this is the thing with countries like Pakistan and India. I'm not going to comment on China, but obviously I'm originally from Pakistan. My family's 4 generations in Dubai. My grandfather, my father, myself, and my children have been here in Dubai, born and raised in Dubai. But I am obviously originally Pakistan made. Okay, so obviously I understand the Pakistan market a little bit better than I can't comment too much on India. But here's the thing, there's this huge population growth that takes place in Pakistan and India, right? I think we're about above 200 million people now. I don't know, I think maybe 250 million just in Pakistan. India's over 1 billion. It's a well-known fact, right? I think it's a fact. So there's a huge opportunity. Well, I don't want to call it opportunity because I'm not selling Pakistan, but I'm just trying to assess an opportunity or assess how land values, how asset values grow in these countries, right? So in real estate, there is this opportunity because, there's this huge, humongous organic growth in population, right? So the population just keeps skyrocketing, and obviously, they're not making more of land, and cities can't just quickly grow into suburban areas, become urban. Actually, a lot of times, like cities, if you see Mumbai, Lahore, Karachi, like this was the city 10 years ago, and now it's here. Now 20 after 20 years, it just keeps growing, right? So things that were out in the suburbs kind of like starts becoming central to the city. This particular opportunity, this person purchased plots of land, right? So this was just land purchased about 17, 18 years ago. Now, how did I evaluate what the actual return was here? What was the actual return? Now, because what you see is 2.5 million rupees becoming 25 million, right? So that's kind of like over a period of 17 years. That's like 10 times your money. But is that the truth? Okay, here's what I did. Okay, I essentially assessed the price of the dollar, because here's something that you need to understand. Places like India, Pakistan, some of the Middle Eastern countries, their currencies fluctuate against the dollar. I still remember one political science professor from one of the regional Middle Eastern countries said, nobody should invest in Dubai. This was like a year and a half ago in the DIFC at an economic forum. She gave advice what she felt was the best. She said nobody should invest in Dubai. Actually, she didn't say nobody should invest in Dubai. She said, come to my country, the banks are giving 20%, right, as interest rate. Okay, now people who know me know that I'm not a big proponent of interest rates and putting money in banks, because essentially money kind of doesn't do anything. It's not put to good use, right? However, this particular country right now, it has the currency is devalued so badly against the dollar that even at 20%, it's just not going to make sense. So you got to always evaluate the risk versus the reward. They're giving you 20% because the risk is extremely high. Anyways, that's a side point. But again, even with Pakistan, the dollar has been not fluctuating, it's been the rupee devalues, right? So when the economy generally becomes stronger, the currency becomes stronger. But here's the thing. So what I did is I went to the internet and I looked at what was the exchange rate from the dollar to the rupees back in 2003, 2002, right? And I think if I remember correctly, it was somewhere around 54, okay? So for every 54 rupees you could get, can you see this? So let's just put it here. So $1 was approximately 54 rupees. And what is it today? Because that's market price today. $1 is 160, I think it's 160 odd rupees, okay? Market's going up and down. So do you see this, right? So if you were to just blindly look at this and say, boom, I gotta go and invest in Pakistan or India, whatever the case is, because market prices or my asset price would 10 times double, would go up 10 times in 17 years. So this transaction, I think, took place in 2003. We're in 2020 right now. What you need to recognize is, let's say if you were a US American, right? So if you invested at that time and then took the money back today, that money would be worth much less, okay? What I also did is I just looked at how much was the investment at this time. So based on the exchange rate, this was approximately $46,000. And based on the exchange rate, you're actually essentially selling for $156,000, okay? That's just my rough calculation. So essentially, if you really look at it, 156 divided by 46, your money is really just, technically speaking, in 17 years, it's a 3 times jump. It's not a 10 time jump, right? I hope you're actually following this and you're able to understand this, okay? But what I'm actually further interested in calculating, and anybody can comment in the comment section and correct me if they feel that my calculations are off and they're not correct, because the puritanical people with the Excel sheets and the evaluation, I'm just doing like rough calculations, right? Like we call them fat calculations, but the puritanicals will actually take me to the laundry because net present value of money, etc., all would need to be calculated, right? But here's the thing. So let's just assume that 110,000 approximately is what you've made. Now, if you take 110,000 divided over 17 years, you get approximately 6,440. And then if you divide this over 46,000, you get about 14%, okay? So if you want to know more about how I did this, you can ask me and I'll explain it to you. But essentially speaking, the net return on these plots of land calculated per year was 14%, okay? Now, if I move this a little bit to the left or the right, and these numbers, like for instance, this wasn't, the person couldn't remember when they bought it. I think it was 2001 or 2002. So if I did like a flat, straightforward 20 years, this comes down to approximately 11% at that time, okay? So it comes down to 11%. What you need to also understand is all during this time, these plots of land were just sitting idle. So there was no money coming to you as net income. Now, I generally follow the Warren Buffett School of Investments that essentially says, he likes to value invest and he likes to invest in assets that generate income, right? Gold is amazing, but you can't eat gold and it gives you no net rental income or net income every year. Land is amazing, but it doesn't give you any income unless you're using it for agricultural purposes. And these lands were not the case, right? Okay, so it's 14 to 11%. And if you look at some of my videos, I talk about this. 3% to 10% is real estate return the world over. 3% in the really developed markets, 10% in the markets with more risk. Like maybe we take Pakistan as a market that has more risk, because you see where the dollar has gone, right? So if you're going to put that money in that country, you're going to have to be ready to buy less dollars after 17 years. And this could change, right? Pakistan's got economic policies that they're putting in place, and dollars becoming it's becoming better. Okay, I'm not going to get in that. So if I say it's 3 to 10%, what about this extra 4% that this person's gotten? Well, okay, maybe it's just they're blessed out on this, but you got to remember, I personally would allocate this 4% to the risk this person took for gaining no income over a period of 17 years. Because if you were gaining income every single year, you could take that income and reinvest it in something else, right? So if you were even gaining 7%, let's say 7%, okay? Per year, that's 3,220 over 17 years. You could have essentially, while you were holding a property worth this, because it's 54,740, 54,000, maybe you can see it, 54,740. So essentially speaking, you could have had $54,740 at just 7% return. And you could have, if this was not land and whatever property this was, you could have had at this moment 2 of these and 2 more of these from the income that was coming here. Yet you didn't do that, and what ended up happening is you waited all the way to the end. So okay, even if I say you got 14%, the extra 4% is for the time period that you had to wait, which obviously, you know, there's a risk factor in there because you're waiting, right? And you're getting no income. But if you were just getting 7%, guess what? You could have had 2 more assets. Instead of just having 2, you would have 4. I actually didn't think about it like that, but that's the reality. So I stand still where I stand, but you can correct me, because this is not the, you know, holy grail or etched in stone. It's still 3 to 10%. The extra 4% this person has gotten is actually the risk, the value of waiting and not having to wait for that to get, not having to get that money. Okay, hit the subscribe button, press the bell icon. I hope this has helped you. Hit the thumbs up. Any question? You want to work with me? Want my services? There is something below, a contact form. I'll help you buy property, or what are my other services? Perhaps a real estate strategy session, perhaps a chat. I do charge you for the chat. If you've got questions and you don't want to pay for it, you're more than welcome to put them in the comment section below. I'll be happy when I get around to it to answer them, right? For everyone's benefit. Okay, love you all. Take care. Ciao for now. Bye.